Not everybody is as optimistic following 3Q's dismal 4% growth. BPI lead economist Neri says fourth quarter GDP and for the full year will each come in below 5%. He joins us now for more. June, good seeing you again. Welcome back to the program.
Nice to be back, Kathy. Nice morning to your listeners and viewers. Yeah.
Okay, so USEC Rose there is convinced that fourth quarter could easily scale at least 5% because we're at a state of calamity since November 7th, and the calamity funds are going to be easy to come by and support the recovery. What do you make of it?
We're not completely ruling that out, Kathy. Government being able to reallocate some of its funds to address this calamity, and of course also to other agencies. No? But it looks like the room for this is quite limited already at this point in the year. Maybe the realignment of the budget next year can really help strengthen the second half of 2026. But it looks like there's very limited space already for the rest of the year, aside from the fact that even private contractors, the honest ones, could be hesitant to sign contracts with the government.
Well, let's take a step back, June, and look at where you were at that Business World poll that we conducted for third quarter GDP. You were at 4.9%. And we thought you were pessimistic back then, but it turned out to be one of the more optimistic. So where are you now with the conviction that there might not be that extra public spending coming through in Q4 and for the full year?
Mm-hmm. Yeah, the full percentage point, almost full percentage point overestimate that we made shows that really the spending the third quarter had weakened substantially. Even household consumption was affected negatively by the absence of the positive multiplier coming from government outlays. No? So really a lot of work has to be done to recover the consumer confidence as well as, of course, business confidence, Kathy. So, of course, this can still be restored. It can actually be much stronger next year, more so if we see reforms really being delivered by the government.
So it's really next year, June? I mean, you're ruling out this quarter. Should those calamity funds make a difference? Or if it can, at least provide that support to a quarter with little or no public infrastructure spending coming through?
To some extent, we've already factored that in, Kathy, because we're looking at something like 4.8% for the fourth quarter, which is already much stronger than the third quarter figures, but probably not enough to be able to bring it well above 5% if we will only be spending on calamity funds. So there really has to be a meaningful realignment of spending, if away from the DPWH flood control projects to other DPWH projects, maybe counterpart funding for ODA projects. So more likely than not, the realignment can be better executed next year. The other thing, Kathy, is we're comparing this fourth quarter with an artificially strong fourth quarter last year, because last year we were still doing the flood control projects. The numbers were, I guess, overstated in a way, and we're comparing this normal quarter of sorts versus one which understates the true picture for government spending.
Well, let's take a deep dive into the two streams of spending. You mentioned the first, national government spending, and the other one of particular interest is infrastructure spending. How much of public infra spending's come off in the third quarter, which led to that surprise 4% GDP result? And how does that compare with the year-to-date spending levels and in the months after the president announced the anomalies in his State of the Nation address?
Yes. So if you look at the total spending, Kathy, there has been a decline, although just a single-digit decline. But typically, you don't see that from government since they need to support the economy. We are still recovering 5 years after the pandemic. There really needs to be additional support on the part of government. However, it has been misallocated, though we didn't put as much for education and health. That's why we are suffering this spending slowed down. No? But for infra, it was a dramatic drop, anywhere from 25 to even some months more than 40% drops, Kathy. So this is largely because of the cancellation of most flood control projects. No?
Exactly. As you can see on that chart, it's double-digit losses we're already talking about for the third quarter alone, which gives conviction to your assessment that it could be below 5%. Now, the budget realignment begins in earnest next year, as you say, but the Senate Committee on Finance has further slashed the proposed DPWH budget under the approved General Appropriations Bill. So what impact do you think might a reduced budget for DPWH have on the GDP for 2026?
Yes, as long as it's reallocated to other agencies that will be able to mobilize the funds more efficiently. And you really need time to be able to sort that out, Kathy. That's why we're not too optimistic that we can do it in this quarter, no, immediately. So after being able to sort out where it's best to reallocate these funds, in fact, even for some flood control projects, it makes sense to continue some of them. Those that have complied with rules of construction. So again, it's how efficiently we're able to realign the budget, Kathy,
As
to
far
the
as the Senate is
agencies.
concerned,
Yeah.
they're putting bulk of that now to DepEd, and Angara is hoping to construct classrooms with it. Would that make a difference?
Yes, that helps a lot, Kathy. We have such a huge backlog in classrooms. Again, after being able to catch up back in the early period of the previous decade, middle of the previous decade, now we're falling behind once again. So if that can be carried out quickly and efficiently without much leakage, then that will be positive for the economy, Kathy. That's why for our projections in 2026, we think there will be 6.5 to almost 7% growth rates for the third and fourth quarters. No? Because we think by then they've been able to figure out where exactly to put the money, and they've already been able to mobilize it.
But as an economist, June, how are you making sense or reading into the series of protests, including the upcoming November 30 trillion peso march, as people let on their continued anger and demands for accountability?
Yes, that's crucial for reforms to really be put in place, Kathy. Without this kind of tension, we will just be business as usual, and we will not carry out the much needed reforms to fix our political and governance weaknesses. No? So we need these kinds of protests, actually, Kathy, and many of us should actually support it. But of course, we have to avoid possible fragilities that could arise from, unmanaged protests or some violence that could be foreseen or highlighted to the global economy as very risky. No? So there's some balance there, but we shouldn't really be shunning protests, because these are the necessary steps to a real reform, Kathy.
We have a final minute, June. It looks like it's going to be a hard carry for the Bangko Sentral. What are the chances of an overshoot?
There's actually a big chance, Kathy, because the economy is performing below potential. Their target is around 6.5%. We're now moving at sub 5%, and there could be, some prodding for extra cuts. No, the U.S. is also in an easing mode, so this will allow the BSP to resume the cuts. But I sense, so I feel that because of all of these factors going together, we could overdo the cuts, no? So that by next year, we might realize that we have done a little bit too much. And that reversal in direction of the policy could actually cause a lot of volatility in the markets, be it the bond, equities, or even the money markets, Kathy.
All right, and we do have to continue to monitor that. Thank you so much for your insights, June Neri of BPI.